Welcome to my presentation on Tesla stock evaluation for the fiscal years 2019 to 2023. This presentation will delve into various aspects of Tesla's financial performance, including key metrics, financial statements, and advanced financial modeling techniques. My goal is to provide a comprehensive analysis of Tesla's stock and its potential for future growth. The objective of this presentation is to evaluate Tesla's stock performance over the past 5 years. Now, I will analyze Tesla's financial statements, calculate the weighted average cost of capital, perform leveraged buyout modeling, and evaluate the internal rate of return. By the end of the presentation, you will have a clear understanding of Tesla's financial health and investment potential. I'll start with the trinity of financial statements, which are the income statement, balance sheet, and cash flow statement. This slide will discuss Tesla's income statement analysis for the financial years 2019 to 2023. This analysis provides a detailed examination of Tesla's income statement from 2019 to 2023. The key metrics analyzed include revenue, gross profit, operating income, and net income. The trends in these metrics over the 5-year period are visualized in this chart. For revenue, Tesla's revenue has shown a remarkable upward trend from 2019 to 2023. Starting at approximately $24.6 billion in 2019, it's grown to an estimated $100 billion in 2023. This growth can be attributed to increased vehicle deliveries, expansion into new markets, and the introduction of new models. Gross profit. Gross profit has also seen significant growth, rising from $4.84 billion in 2019 to an estimated $25 billion in 2023. This increase reflects Tesla's improved production efficiencies, cost management, and higher sales volumes. The gross profit margin has improved as well, indicating better control over production costs relative to revenue. Operating income has experienced substantial growth from $630 million in 2019 to an estimated $15 billion in 2023. This growth is driven by higher gross profits and effective management of operating expenses. Tesla's focus on scaling production and optimizing operations has contributed to this positive trend. And net income. Net income has shown a strong upward trajectory, starting at $862 million in 2019 and reaching an estimated $12 billion in 2023. This growth is a result of increased operating income, lower interest expenses, and tax benefits. Tesla's ability to generate substantial net income highlights its profitability and financial health. Overall, Tesla's income statement from 2019 to 23 demonstrates impressive growth across all key metrics. The company's strategic initiatives, operational efficiencies, and market expansion have contributed to its financial success. And this chart is a visual representation of these trends, providing a clear picture of Tesla's financial performance over the 5-year period. In this slide, I'll analyze Tesla's balance sheet. Total assets have shown a constant upward trend from 2019 to 2023. Starting at $34.31 billion in 2019, the assets grew to $82.34 billion by 2023. This growth reflects Tesla's expansion in production capacity, investments in new technologies, and increased market presence. Total liabilities have also increased over the years, from $26.39 billion in 2019 to $41.98 billion in 2023. While the liabilities have grown, the rate of increase is slower compared to the growth in total assets. This indicates that Tesla has managed its debt and other obligations effectively while expanding its operations. Shareholders' equity has seen significant growth, rising from $7.92 billion in 2019 to $40.36 billion in 2023. This increase is a positive indicator of Tesla's profitability and its ability to generate value for its shareholders. The substantial rise in equity suggests strong investor confidence and successful capital management strategies. Overall, Tesla's balance sheet from 19 to 23 demonstrates robust growth in assets and equity with a manageable increase in liabilities. The company's financial health appears strong, supported by its strategic investments and effective debt management. Next, I'll analyze Tesla's cash flow statement. Tesla's operating cash flows have shown a remarkable upward trend from 2019 to 23. Starting at $2.41 billion in 2019, the company steadily increased its cash generation from operations, reaching $14.72 billion in 2023. This growth reflects Tesla's expanding production capabilities, increased sales, and improved operational efficiency. Investing cash flows have been constantly negative over the 5-year period, indicating Tesla's substantial investments in capital expenditures, research and development, and expansion projects. In 2019, Tesla's investing cash flows were negative $1.33 billion, and by 23 they had increased to negative $7 billion. These investments are crucial for Tesla's long-term growth and technological advancements. Tesla's financing cash flows have fluctuated significantly between 19 and 23. In 2019, Tesla raised $2.28 billion through financing activities, which increased to $5.37 billion in 2020. However, in 22 and 23, Tesla's financing cash flows turned negative, reflecting debt repayments and reduced reliance on external financing. The negative financing cash flows in recent years indicate Tesla's strong cash position and ability to fund operations and investments internally. Overall, Tesla's cash flow statement from 19 to 23 highlights the company's robust operational performance, strategic investments, and evolving financial strategies. The positive operating cash flows and substantial investments underscore Tesla's commitment to growth and innovation, while the fluctuating financing cash flows reflect its dynamic approach to capital management. The weighted average cost of capital is a crucial metric for evaluating Tesla's financial performance and investment attractiveness. It represents the average rate of return required by all of Tesla's investors, including both equity and debt holders. This chart visualizes the WACC trend over the 5-year period. From 2019 to 2023, Tesla's WACC has shown significant fluctuations, reflecting changes in its capital structure, market risk, interest rates, and investor expectations. In 2019, the weighted average cost of capital was approximately 13.97%. This relatively lower cost of capital indicates a balanced cost of capital with moderate risk and return expectations from investors. In 2020, the weighted average cost of capital increased to around 16.38%. This rise can be attributed to higher market risk and increased cost of equity, possibly due to Tesla's aggressive growth strategies and market volatility. In 2021, the cost of capital peaked at approximately 18.42%. This significant increase reflects heightened investor expectations and market risk, as Tesla continued to expand its operations and innovate in the electric vehicle industry. In 2022, the cost of capital decreased to about 14.81%, suggesting improved investor confidence and a more stable capital structure as Tesla's financial performance strengthened. In 2023, the cost of capital slightly increased to around 15.32%. This indicates a balanced cost of capital with stable investor expectations and moderate market risk. Tesla's cost of capital trend, weighted average cost of capital trend from 2019 to 2023 highlights the dynamic nature of its financial environment. The fluctuations in the weighted average cost of capital values reflect changes in Tesla's capital structure, market conditions, and investor sentiment. Understanding these trends is essential for evaluating Tesla's investment attractiveness and financial health. This slide and this chart illustrates the trends in Tesla's EBITDA, debt repayment, and free cash flow over the 5-year period. The leveraged buyout model is a financial tool used to evaluate the acquisition of a company using a significant amount of borrowed money to meet the cost of acquisition. In this analysis, I'm examining Tesla's LBO modeling from 2019 to 2023, focusing on EBITDA, debt repayment, and free cash flow. Earnings before interest, taxes, depreciation, and amortization is a measure of the company's overall financial performance. Tesla's EBITDA has shown remarkable growth over the 5-year period, increasing from $2.5 billion in 2019 to $9.8 billion in 2023. This growth reflects Tesla's expanding market presence, increased production capacities, and a strong demand for its electric vehicles. Debt repayment is a crucial component of the LBO model as it impacts the company's ability to service its debt obligations. Tesla's debt repayment has steadily increased from $0.5 billion in 2019 to $2.5 billion in 2019. This trend indicates Tesla's commitment to reducing its leverage and improving its financial stability. Free cash flow represents the cash generated by the company after accounting for capital expenditures. Tesla's free cash flow has grown significantly from $1.0 billion in 2019 to $6 billion in 2023. This increase highlights Tesla's ability to generate cash from its operations, which is essential for funding growth initiatives and service of debt. To wrap up this slide, Tesla's LBO modeling from 2019 to 23 demonstrates the company's strong financial performance and ability to manage its debt obligations effectively. The growth in EBITDA, debt repayment, and free cash flow underscores Tesla's resilience and potential for continued success in the electrical vehicle market. Next, I'll evaluate the IRR. This chart illustrates Tesla's cash flows and exit value over the 5-year period of 2019 to 2023. The internal rate of return is a key metric used to evaluate the profitability of an investment. For Tesla, the IRR from 2019 to 23 has been calculated based on estimated free cash flows and an assumed exit value. The cash flows for Tesla over the 5-year period are as follows. 2019, the initial investment of negative $1 billion. In 2020, $500 million. 2021, $700 million. 2022, $900 million. 2023, $1.2 billion. And the exit value is $1.5 billion. These cash flows reflect Tesla's strong growth and free cash flow generation, driven by increasing revenues and operational efficiencies. Using the cash flows mentioned previously, the IRR for Tesla from 2019 to 2023 is approximately 67.88%. This high IRR indicates a significant return on investment, showcasing Tesla's robust financial performance and growth potential. And with that, that is the conclusion to my presentation. Thank you for listening, and I hope that this was a comprehensive review of Tesla stock and their investment potential. Thank you for a wonderful class this year.